It was a stellar year for gold finance companies, with Manappuram Finance recording over 80% returns in 2019 and Muthoot Finance recording over 45% returns. So how is 2020 going to look like? We have the management of Manappuram Finance joining in, Mr. Nandakumar. Mr. Nandakumar, first of all, a very happy new year to you. And 2019 was a great year for gold finance companies. How is 2020 going to look like?
Yeah, I returned the same wish last year. Had been, I hope, had been good to you and good to your audience also. I wish the same to be repeated with much more intensity in 2020. So, with the question about last year, yes, last year was good. We are hopeful of achieving our targeted CAGR of 20% and ROE of 20%. All the verticals are doing well. In the non-gold verticals, our emphasis today is more on timely collection, regular collection, because we see some slowdown in the economy. Non-gold segment, we are really concerned about what is happening in the economy. So our emphasis is timely collection. So in the non-gold segment also, the collections are happening as it was happening earlier. So the quality has only improved. So no deterioration. Gold, yes, we have grown. We are hopeful of achieving the overall targeted growth and ROE. So we hope that the next year also it will be continued.
Sir, starting with the gold loan segment or going into a bit more detail. So while you are targeting a 20% growth rate, specifically in the gold loan segment, how much growth rate are you looking at in 2020? And as gold prices have increased quite a bit, so are you also lending, with higher ticket sizes to the consumers?
So there is no change in the ticket size. Our targeted growth in the collateral, gold collateral, is around 10 to 15%. So we have achieved that already. And from the trend, what is seen today, we anticipate the same level of growth during next year also.
Okay. And sir, as your yields continue to be steady, I understand, in the business, and your costs, how is the cost side behaving lately? Has there been a reduction in the cost of funds, and is that resulting into higher margins for you?
The reduction in the policy rates affected by the central bank, that is not passed on to us in a big way. So, but with the upgradation of our credit rating by CRISIL from AA minus to AA, so we are getting funding. There is we are whatever is our asset creation requirement, that we are able to source funds. So regarding the cost of funds, there is no much reduction. There is a reduction of some 10-15 points only. That is not what is what was the policy reduction, policy rate reduction. Anyway, what I can tell you is even the cost has not come down so much, very much as expected. But we are able to attract funding for our growth.
Okay. Sir, talking about the non-gold segments, you said that in your first answer that the impact of economic slowdown is actually hitting these particular segments. You are into housing finance, microfinance, and vehicle finance also. So which of these segments is concerning you the most at this point in time, and what kind of asset quality pressures are you witnessing there?
So the cost of borrowing for non-gold segment also has not increased because our subsidiaries also have got their credit rating upgraded by CRISIL. They enjoy the credit rating of AA minus for a similar size company. This is one of the highest ratings in the country. So in microfinance in particular, AA minus is the highest rating by any rating agency to a MFI institution. Regarding the asset quality, there is no much difference. The quality continues to be the same. So we are more focused on timely collection, as I mentioned. Because of that, there is no deterioration in asset quality. We are only trying to improve, and we hope that the quality will improve going forward also.
Okay, so let's talk about one segment, which is the commercial vehicle segment. So you are basically into the commercial vehicles financing, and that segment was one of the worst hit in the year gone by. So going forward in 2020, do you expect a revival to happen in that particular segment, and what are your plans in that segment going forward?
So I expect the segment will be revived because my impression is the slowdown is cyclical. So once the formalization of the economy is in place, is stable, I think the growth will come back. So with that, I am very positive about that segment during the next year.
Okay, so you are basically into southern and western India when it comes to the commercial vehicles financing. So are there plans to expand beyond these regions as well, or do you plan to expand within these regions but more districts, more areas?
Of course, we have that plans. We analyze district-wise, what is happening district-wise, etc., etc. We have seen in some of the districts, even though the state may not be performing that well, we have seen at least some centers, there is high localization with regard to the economic activities across India. So we are analyzing that. Based on that, we will be expanding our business to other places also.
Okay, so do you follow this district-wise approach when it comes to the microfinance business as well, and that segment as well? For most of the companies into this segment are seeing very strong growth rates in excess of 35-40%. So how is 2020 going to look like? And there are concerns about over-leveraging in the microfinance space. So what are your thoughts on the same?
See, we maintain the collection rate at 99%. So we hear that there are pressure in collection in northeastern states. But our presence there in Assam and other northeastern states is very low. In Calcutta, in West Bengal and Orissa, we have good presence, where our AUM per state is around 10% or less only in each of. But we have not seen any pressure there. Now we are going district-wise. We have capped our exposure in a district now at 1% with a direction to go bring it down to 0.5% in another 3 years. So we are working in that direction. So we don't go by the growth prospects in any local area, in any district. So we have an internal cap, and also our maximum cap is 60,000 rupees per individual. Even though that has been hiked to 2 lakhs in metros, etc., non-metros around 1.25 lakhs, We are not granting that. We always have a check that we are the first lender or the second lender, even at the time of renewal of the existing facility or the second cycle loan, etc., etc. We are very careful about that. So our emphasis is always on quality. So this will be maintained even at the cost of growth. But still, we target, this year we have grown around 30%. So next year also we are hopeful of growing at a rate of 20-25%, which is our targeted growth with quality.
So basically, I've been studying the business models of various microfinance players, and one of the key things which market participants and shareholders are looking at is the repayment or the collection models, whereas wherein the meetings are held on a weekly basis or a fortnightly basis or monthly basis. So what is it that you follow, and does it really make a difference at the ground level?
So we follow a pattern of monthly collection. So, but whereas we see a stress, we go back to bi-monthly collection or weekly collection. But I tell you, 90% of our collections are monthly collections only. About group meetings, also we do it on a monthly basis. Our average attendance is around 60%. So even though the attendance of the borrowers are 60% average on an average, but that didn't affect the collection so far. We are trying to improve the group level meetings by offering them some incentive, so that the contact with them also will remain live.